So let's talk about Intuit. You know them. They're the software giant behind huge names like TurboTax and QuickBooks. But right now, after a pretty big stock sell-off, there's a fascinating analysis out there that says the market might be completely missing the boat. We're going to break down what some are calling the bull case.
Okay, first things first, just look at the price tag on this company. What you're seeing here is its price to earnings multiple, basically how much the market's willing to pay for its profits. And right now, it's the cheapest it's been in over a decade. For a powerhouse company like Intuit, that's the kind of thing that really makes you stop and go, wait a minute, what's going on here?
And that really is the central question we're digging into today. Is this low price a warning sign that something's fundamentally broken? Or has the market just panicked, gotten scared about the future, and created a really rare buying opportunity for one of the biggest names in software?
Well, if you ask the analysts at Morgan Stanley, the opportunity is very, very real. They've put together this powerful thesis with a fantastic, memorable name. They call it the triple-double bull case. It sounds like something out of basketball, but it's a really simple, compelling way to think about where Intuit could be headed.
So what's in a triple-double? Well, the first double is all about revenue. The bull case here sees a path for Intuit's revenue to more than double, blasting off from about $19 billion in fiscal year 2025 to a massive $43 billion by 2030.
Now, when you have that much more money coming in the door, it flows right down to the bottom line. And that's the second double, earnings per share. The projection is that their earnings could also more than double, jumping from around $20 a share all the way to $53 a share in that same time frame.
Okay, so you've doubled your revenue, you've doubled your earnings. What's the big payoff? Well, that's the final double. If all that happens, this analysis suggests the stock price itself could follow suit, potentially hitting $1,300 a share. Now I know, that's a huge prediction, so let's get into how they think that's even possible.
So you've got to be asking, how does a company this big even pull off that kind of growth? It's a fair question. The thesis argues this isn't just about business as usual. This whole forecast is really based on two very specific and really powerful new growth engines that are just starting to fire up. And look, this isn't just a number they pulled out of thin air. They've literally mapped it out. This chart is like a bridge, showing you exactly how Intuit gets from here to there. You can see the main pillars holding this bridge up: our mid-market accounting, online services, and TurboTax Live. Let's tackle that first growth engine. All right, engine number one. Intuit is making a major play to conquer the mid-market. Think about businesses that have gotten too big for the basic QuickBooks software, but they aren't some giant corporation yet. It's this huge sweet spot in the market that for a long time has been wide open for the taking. And this is why there's so much confidence here. First, the market is just enormous. We're talking about an existing base of 800,000 potential customers, plus another 900,000 new businesses up for grabs. Second, their new product is way cheaper than what competitors are offering, a huge cost advantage. Plus, they're not just waiting for customers to show up, they're building a sales force and teaming up with accounting firms. The bull case says they can grab 40% of this market. Okay, that was engine one. Engine number two is just as massive. It's all about disrupting the assisted tax industry. You know, we're talking about the millions and millions of people who pay a professional tax preparer every single year to do their taxes for them. The numbers here are just staggering. There are 86 million people who get help with their taxes. And get this, 11 million of them switch who they use every year. That is a ton of business that's up for grabs. And Intuit's product for this, TurboTax Live, has already proven it's a winner. It grew an unbelievable 47% in 1 year. They can also come in at a lower price, and they have a secret weapon with Credit Karma funneling new customers right to their door. So if this all sounds so good, then what's the catch? Why the big stock sell-off? Well, it all comes down to two letters: AI. The big fear hanging over the market, the whole bear case, is that some new slick AI tool is going to come along and just make Intuit obsolete. But let's pump the brakes and really compare the fear to the reality. First off, Intuit's value isn't just software. It's decades of brand trust. You don't just hand your entire financial life over to a random AI startup. Second, the technology behind this is incredibly complex. Connecting to thousands of banks is a huge barrier for anyone new to come in. On top of that, Intuit has deep relationships with accountants who recommend their products. And honestly, it seems like people are starting to get a little more skeptical of brand new AI vendors, which actually makes Intuit's trusted brand even more valuable. So when you put it all together, you've got these two massive growth engines, plus some really strong defenses against this AI threat. You start to see a much clearer path forward.
So let's connect all of that back to the big payoff, that potential $1,300 stock price. This table just sums it all up perfectly. There's your revenue, more than doubling to $42 billion. There are your earnings, more than doubling to $53 a share. And here's the kicker. The math to get to that $1,300 stock price doesn't even assume a crazy valuation. It actually assumes the stock will trade at a lower PE multiple than its historical average, which makes the whole thing sound that much more credible. And just to really hammer this home, this isn't just guesswork. Just like with the revenue, they've built a bridge for the earnings. You can see piece by piece how the mid-market business, the online services, and TurboTax Live all contribute and stack on top of each other to build a really clear step-by-step path to that $53 target. Which really brings us full circle. After this big sell-off, you've got what might be one of the most durable, trusted franchises in the entire software industry. It's attacking two enormous new markets, and it's trading at a price we haven't seen in a decade. So it leaves us with one final big question to think about. Is the market actually seeing a fundamental problem here, or is it just getting spooked by the short-term AI fears and completely missing the bigger picture?